Ever wondered how much you could have earned if you invested in Amazon 10 years ago? Let's take a moment and dive into that thought. Imagine, a decade ago, you took a chance and put your money into Amazon. Back then, it was just another promising tech company. Fast forward to today and you'd be sitting on a mountain of returns. It's not fantasy, it's reality for those early adopters who saw the potential and took the leap. Let's talk numbers. In the last 10 years, Amazon's stock price has skyrocketed, increasing by over 2,000%. That's right, a 2,000% increase. That's like turning a single dollar into $20 or 1,000 into 20,000. Now that's what I call a profitable return on investment. But don't worry if you missed the Amazon train, the investment journey is far from over. The future holds countless opportunities for those willing to take the leap. So, are you ready to jump in? While we can't go back in time to invest in Amazon, we can certainly look at the present and future. Right now, we're standing on the precipice of a new era. An era where technology and green energy are not just buzzwords. They are the driving forces behind some of the most promising investment opportunities. Let's delve into this exciting landscape. The technology sector has been on a meteoric rise in the past decade. Companies from Silicon Valley to Bangalore are continuously pushing the boundaries of innovation, creating products and services that are transforming our lives in unprecedented ways. From artificial intelligence to quantum computing, technology is evolving at a pace that's faster than ever before. And this pace isn't showing any signs of slowing down. Now let's talk numbers. According to market research, the global technology sector is expected to grow at a compound annual growth rate of around 5% over the next 5 years. That's a lot of zeros. But it's not just the tech sector that's making waves. The green energy sector is also showing substantial promise. With the world becoming increasingly conscious about the environment, the demand for clean energy is skyrocketing. Solar, wind, and even geothermal energy are no longer the stuff of science fiction, but the new reality. The global green energy market is projected to reach a staggering $2.5 trillion by the end of this decade. That's trillion with a T, folks. And this is just the beginning. As more countries pledge to reduce their carbon footprint, the demand for green energy is only set to increase. So, what does this mean for you, the savvy investor? It means that the future is ripe with opportunities. Opportunities that could potentially yield the same returns as those who had the foresight to invest in Amazon when it was just a fledgling online bookstore. So if you're looking for the next Amazon, you might want to turn your gaze to these sectors. Keep hustling. So what are some of the top companies to consider for investment right now? Let's kick things off with Amazon. Yes, you've heard it right. The same company that started off selling books online now sells, well, pretty much everything. Amazon's market share is staggering. In 2023, Amazon dominated 40% of the US e-commerce market. That's like being the king of the jungle, and the jungle just happens to be made of gold. Not to mention their ventures into cloud computing, digital streaming, and artificial intelligence. So, if you're looking for a company that's a jack of all trades and master of, well, all, Amazon is a solid bet. Next up we have Tesla. The electric vehicle and clean energy company has been a game changer in the automobile industry. Their growth rate is nothing short of impressive. In just the past 5 years, Tesla's annual revenue has skyrocketed from $7 billion in 2019 to a whopping $31 billion in 2023. Talk about a growth spurt. And with the world leaning more towards sustainable energy, Tesla's potential for future growth is as bright as a brand new electric bulb. Moving on, let's talk about Zoom, the video conferencing software company that transformed our living rooms into offices and classrooms. In the age of remote work and learning, Zoom has become a household name. Their market share in the video conferencing industry grew from less than 10% in 2019 to over 40% in 2023, and it doesn't seem to be slowing down. So if you're looking to invest in a company that's the talk of the town, and every town for that matter, Zoom's got you covered. Now let's not forget about Alphabet, the parent company of Google. This tech giant is a force to be reckoned with. They've got their fingers in every pie, from search engines and online advertising to cloud computing and self-driving cars. Alphabet's market share in the global search engine market is a whopping 92%. That's like being the only player on the field while everyone else is just spectating. With their constant innovation and diversified portfolio, Alphabet is a company that's always ahead of the curve. Finally, we have Moderna. The biotechnology company has been a trailblazer in the fight against COVID-19 with its mRNA vaccine. Their share price has seen a meteoric rise, increasing by over 700% in the past 2 years. With their innovative approach to medicine and promising pipeline of potential treatments, Moderna is not just an investment in a company, but an investment in the future of healthcare. Remember, investing isn't about getting rich quick, it's about making informed decisions and playing the long game. While the potential rewards are high, it's also important to remember that investing comes with risks. Now let's break down what these risks are and how you can navigate them. Firstly, there's market volatility. The value of your investments can rise and fall rapidly, sometimes within the same day. Imagine you're riding a roller coaster. It's thrilling, but also a bit nerve-wracking, right? That's market volatility for you. Thrilling when your investments are on the upswing, but nerve-wracking when they're plummeting. To illustrate, let's look at the dot-com bubble in the late 90s. Many internet companies saw their stock prices skyrocket, only for the bubble to burst and investors to lose significant amounts of money. It's a stark reminder that what goes up can indeed come down. Another risk is the potential for loss. Investing isn't a guaranteed way to make money. You could lose some or even all of your initial investment. It's like going to a casino and rolling the dice. Sometimes you win, sometimes you lose. But unlike a casino, you can take steps to manage your risk. One effective way to manage risk is through diversification. This means spreading your investments across a variety of assets, sectors, and geographical locations. It's like having a balanced diet. You wouldn't eat only pizza every day, right? In the same way, you shouldn't put all your money into one type of investment or one company. Risk management is also crucial. This involves regularly reviewing your portfolio, adjusting your investments based on changes in your financial goals or market conditions, and not letting emotions dictate your investment decisions. Remember, investing is a marathon, not a sprint. So while investing can be a path to financial growth, it's not without its pitfalls. But with careful planning, diversification, and risk management, you can navigate these risks and potentially come out on top. As the old saying goes, don't put all your eggs in one basket. Keep this in mind and happy investing. So, are you ready to start your investment journey? Let's take a moment to recap the key points we've covered in this video. The investment landscape today is vibrant, filled with a multitude of opportunities. From tech giants to emerging startups, there are companies out there ripe for investment, ready to potentially offer you substantial returns. But remember, as glittery as these prospects may seem, investing is not a get-rich-quick scheme. It's a strategic game, a calculated risk. We've looked at some of the top companies to consider for your investment portfolio, companies that have shown consistent growth, innovation, and resilience. But let's not forget about the people who invested in Amazon when it was just a fledgling online bookstore. They didn't have a crystal ball, but they saw potential, they took a risk, and today, their little investment has grown exponentially. However, as much as we love a good success story, it's crucial to remember that risks are part and parcel of investing. Market volatility, economic downturns, and unexpected business challenges can all impact your investment. That's why it's crucial to maintain a diversified portfolio, to spread out the risk and maximize the potential for returns. This brings us to one of the most important aspects of investing: informed decision-making. It's essential to do your own research, to understand the companies you're investing in, their business models, their growth strategies, and their financial health. Consider your own financial situation and goals. Are you investing for the short term or the long term? Are you comfortable with high-risk, high-reward investments, or do you prefer safer, more stable options? Investing is not just about following trends or jumping on the latest hot stock. It's about understanding the market, making informed decisions, and having the patience and resilience to weather the ups and downs. Investment is a marathon, not a sprint. Keep learning, keep investing, and most importantly, keep hustling.